Okay, welcome everyone. Jason here again. I've got a great video for you. This is for people out there who are thinking about investing. All right, they understand the benefits of investing in a property today, but they still have some lingering questions, which maybe has left them sort of sitting on the fence. So the first thing I want to touch on is what are some of those benefits? Well, the first thing that we're aware of is that fundamentally our property markets are very strong. I've talked about this in other videos. Don't take my word for it. You can jump online. There's plenty of research, forecasting reports talking about some of the growth that we were expecting and the performance of the market in 2020. It was all very positive. Here's an example. You can see here SQM had a forecasting report talking about 2020 with some states there having as much as 14 or 15% growth. All right, very positive in all states. As you can see there from Westpac Economics, same deal. All the states very positive except for Perth. ANZ on your screen there, again, very positive across our markets except for Darwin. So as you can see, 2020, we were set to have an absolute cracker year for property, but Corona came along. Now, the byproduct of Corona was that now we're in a buyer's market, all right, whereas before it was a seller's market. So what is a buyer's market? Well, the technical term is that a buyer's market refers to a situation in which supply exceeds demand, giving purchasers an advantage over sellers in price negotiations. So particularly if you're buying properties on the open market or established properties, as you know, it's very hard to go out and inspect those properties. The auctions have been shut down. So moving forward, there's going to be a lot more opportunity for you to negotiate lower prices on those properties, right? So a great result for people looking to purchase. If we have a look at new property though, it's a little bit different. So with new property, the developers tend to control prices a little bit more, and what they tend to focus more on is incentives. So some of those incentives can look like cash rebates. We're seeing some cash rebates in the vicinity of $10,000 to $20,000, so that's cash back in your pocket. It can be some discounts there, or discounts on some of the construction with regards to the property, stamp duty savings, upgraded packages, whether it's higher ceilings or better appliances, fittings, fixtures, things of that nature. Rental guarantees, a lot more of them are providing up to 12 months, sometimes 2 years rental guarantees. But this is all limited, right? So this is all in play at the moment just because confidence has been withdrawn from the market, all right? But we only see this as short term, because if you're reading the papers and paying attention to what's happening, this was the Herald Sun on Monday. As you can see from the graph there, or the table, we have demonstrated that through our social distancing measures that we can control the spread of this virus, right? So a lot of people should be relieved. It doesn't mean that we relax now on some of these measures, because we still have to manage this for a long time yet, before such time maybe we have a vaccine or something like that. But confidence is there that we can control this. So that is great news. The other thing to consider too is that this has also led to our record low interest rates. We're at 0.25%. The Reserve Bank made it clear that we're not going any lower than that. So the rates that you're looking at today, which are incredibly low, which has led to significantly cash flow positive properties, in some instances $200, $250 each week back into your pocket. But also too, the fixed rates aren't going to get any lower. Interest rates can only go up from here. So again, it's a very opportune time to get out there and lock in some of those interest rates. If you're still sitting on the fence and you have some questions, some of the most common ones are that, well, Jace, if I go to buy a property today, what if I lose my job between now and when, say, I settle on the property? Well, my response would be that if you're working in an industry that is directly impacted, well, then maybe you might want to reconsider. But if you're not directly impacted and you see the benefits, but you still have some concerns, well then focus on something that's established, or focus on something that's brand new that you can buy that maybe already has a tenant in it also, because in that situation, all it simply means is the tenant is covering the costs, right? So these properties are cash flow positive, you're not actually using your own funds. We also teach you how to set up master facilities and have buffers in place, but your tenant takes care of those costs. But your next question might be, but Jace, what if the tenant can't pay the rent? What if they've lost their job or something like that? Well, when you target these areas, I would recommend maybe targeting areas where the rental demand is super strong. So anything where the vacancy rate is, say, less than 2% or 1.5%, you know it's a very strong rental market. It shouldn't take too long before you find another tenant. Worst case scenario, if you don't have rental income coming in, you know that the banks will support you. You can reach out to your bank and look at freezing some of those loan repayments. Other clients have been asking about construction. Some of our clients have properties that are under construction. You know, what if the government shut down the construction industry? Well, they've made it very clear they don't want to do that. They've actually listed construction sites as an essential service because of the amount of revenue and stimulus that provides to our economy also. But also remember that simply what happens is everything gets frozen. So if the builders can't build, all right, and your construction site or construction has to stop, so do those loan repayments as well. All right, so everything just stops until it gets going. But at this point, there's no indication that that's going to happen, particularly now that we've demonstrated we can control the spread of this virus. So are there any advantages to waiting? Well, as I mentioned before, if you are focused on like an older property or an established property and you're buying it through the open market, there is an argument that because of the restrictions in place due to auctions and inspecting properties, etc., that there's still going to be some opportunity to negotiate better prices in the future. So you may want to hold on for a little bit. If, however, you want to target a new property though, and the reason for that is that you want much higher rental yields, you want to generate as much cash flow positive income as you can, etc., it works a little bit differently. As I mentioned before, the developers control the prices. It's not going to lead to heavy discounting. What they tend to do is put these incentives in play. Now, as I mentioned before, those incentives are only short term, and a lot of the builders and developers we're talking about only offer them at a month at a time, and then they reassess. Some aren't offering them at all, and as soon as the confidence starts to come back and they see it, those incentives are off the table. All right, so certainly if you're looking at that sort of strategy, I would definitely recommend to you that you don't hold off too long. So my advice, guys, is real simple. Get educated. All right, stay in tune to what's happening out there in the marketplace. Book yourself in for one of our complimentary property and finance coaching sessions where one of our head coaches will reach out to you, run through, have a look at your situation, talk to you about what's happening in the marketplace, and just keep you in tune with what's happening so that even if you are deciding to sit back and wait for a little bit, that you don't wait for too long. Because if you do, you're going to miss out on all these opportunities. So click the button there for one of your sessions and we're happy to help. Thank you.